Is the Florida housing market a ticking time bomb? While headlines scream about a crash, the reality is a bit more complex. Forget the statewide collapse narrative. Instead, certain cities are showing signs of stress that could lead to significant price corrections in 2025. Today, we're diving deep into the 10 Florida cities most at risk and exploring the real reasons why. So, what's causing these jitters? It's not just one thing, but a perfect storm. We're seeing skyrocketing insurance premiums, with some homeowners reporting increases of 100% or more. Add to that the rising costs of living and stubborn interest rates that are sidelining potential buyers. This combination is squeezing affordability from both ends. While some areas are still thriving, others are starting to feel the pressure, especially those that saw explosive, unsustainable growth over the past few years. Let's start our tour with Cape Coral. Famous for its canals, it's also famous for its recent building boom. A flood of new construction and investment properties has created a massive surplus. Right now, the market is saturated, and sellers are finding they have to slash prices to compete. With so much inventory, and with insurance costs being a huge concern in this coastal area, prices could see a significant drop as supply continues to outpace buyer demand. Next up, let's talk about the greater Miami area, specifically focusing on its high-rise condo market. For years, Miami has been a magnet for international cash and luxury buyers. But now, with a global economic slowdown and a crackdown on foreign investment, that river of cash is slowing to a trickle. We're seeing a glut of luxury condos sitting empty. Owners and developers are facing immense pressure from high HOA fees and maintenance costs, forcing them to lower prices to attract a much smaller pool of qualified buyers. Now, let's head north to Jacksonville. While it has a more diverse economy than other Florida cities, certain suburban areas around Jacksonville went into overdrive with new home construction. These cookie-cutter communities are now facing a reality check. As the initial wave of pandemic-era movers settles, the demand has cooled off, leaving builders with excess inventory. This oversupply, combined with rising property taxes, is putting downward pressure on prices in these specific neighborhoods. Let's visit Orlando, the theme park capital of the world. Its economy is heavily reliant on tourism and hospitality. Any downturn in travel directly impacts the job market and, consequently, the housing market. Furthermore, Orlando became a hotspot for short-term rental investors. With new local regulations tightening the rules on Airbnb and similar platforms, many of these investors are now looking to sell, adding even more homes to the market and potentially driving prices down. Further south, we find cities like Port St. Lucie and Palm Bay. These areas were once seen as affordable alternatives to their pricier neighbors. This led to a massive influx of buyers and rapid price appreciation. But now, they're victims of their own success. Prices have risen so fast that they're no longer the bargains they once were. As affordability becomes a major issue and the initial frenzy wears off, these markets are prime candidates for a correction to bring prices back to more sustainable levels. The same pattern is emerging in places like Lakeland, Northport, and Deltona. They all experienced incredible growth. But as the market cools, these are the areas where prices are most likely to readjust. So, what does this all mean for you? It's not about panic. It's about being informed. The key takeaway is that the Florida housing market isn't one single entity. It's a collection of unique, local markets, each with its own pressures. If you're a buyer, this could present some amazing opportunities in the coming year. If you're a seller in one of these areas, it might be time to get realistic about your pricing expectations. Understanding these local trends is your best tool for navigating what's ahead. Thanks for watching. If you found this breakdown helpful, please hit that like button, subscribe for more real estate insights, and ring the bell so you never miss an update. We'd love to hear your thoughts in the comments below. See you in the next video.